have 3 minutes, but everyone is up here on stage. So, yeah, we'd love to kick it off. We have a very exciting first session. Close friend Yuri, definitely a master of master of everything, honestly, and also a master of ceremonies as myself. So excited to have him here as moderator, founder of Concordia, very exciting product coming up on Aptos. We'll let him speak more on that. We also have Mac Brennan and OG in the space, and also big voice and I probably can say celebrity in Solana. So excited to have him on here, and thank you for coming on last minute. The folks from Tortuga, also really strong team building on Aptos and Sui. And of course, the OGs from Saison Capital, we'll let them intro. But yeah, really excited to have you all on here. And with that, I'll pass it on to you, Yuri.
Hey, everybody, can you hear me?
Yes.
Awesome. So look, thank you so much for inviting all of us here. And as someone just mentioned, for just going through the incredible effort of putting this together. I love the fact that there are so many people on here when so much else is going on during ETH Denver. And it seems like there's a lot of really positive energy in that sense. So I think we can probably just kick this off with a round of some very quick self-introductions, just so everyone kind of knows who's on and where you're coming in from, when you weigh in on the stuff that we're going to chat about. Alejo, since I can see who the speakers are, but it's hard for me to identify who's with what. Could you just maybe cue each person who represents each entity that's participating here, and just everyone give a couple of lines about themselves?
Definitely. I see Nick from Tortuga, probably, or I'm not sure if it's Nick, but I see Tortuga up first. Maybe you want to kick it off there.
Yeah, for sure. Yeah, thank you so much for having me. Can you hear me first of all?
Yeah, perfect.
Sweet, awesome. Yeah, so my name's Nico. I'm from the Tortuga team. We're a liquid staking protocol on Aptos. My experience in the past in crypto is we ran a bunch of validators on different chains, also heavy DeFi user, and then in a past life worked at DoorDash, and there over the course of 6 years built a bunch of product in all areas, and most recently worked on the ads platform there. Yeah, it's really excited to be here. Thanks, Pontem, for organizing.
Awesome, thank you. Next, I see Sharvin from Saison.
Hey folks, glad to be here. So Shavin here, helping to lead crypto investments for Saison Capital. We are the investment arm of one of the biggest Japanese FIs called Credit Saison. Pretty much is the largest credit card company in Japan, and also one of the largest wholesale lenders in Japan, Southeast Asia, and India. So currently we are kind of investing in a lot of early stage projects, ideation stage to Series A, and also have a pretty extensive fund of funds portfolio across crypto and non-crypto. And personally, I guess prior to Saison was a core contributor for one of the biggest on-chain clubs, and then was also heading out fund of funds on a multi-asset strategy for third generation family office. And yeah, thank you so much for organizing this. Really glad to be here.
Awesome, thank you, and also thank you to you for waking up super early. I know earlier today. Yeah, excited to have you on. And up next, I would say special guest, last minute speaker. We've been chatting over Twitter comments. So Mac, thank you for coming on last minute, and yeah, we'd love to get you on his intro.
Yeah, no, excited to see what's going on. The quick background on me is that I'm on the founding team of Margin Group, which is a conglomerate. A lot of our efforts reside on Solana. We became the first protocol in crypto to cross-margin derivative products last year, meaning essentially giving you a single margin account to trade across your favorite decentralized exchanges and cross-margin perps between exchanges, for example, through one account with unified liquidity and all the benefits of unified margin. Have kind of just been in the startup game for a while. Across managed a hedge fund for a little bit. Sold my last company, which was a health tech company, and now on Margin we just launched our borrow lend primitive, which is picking up liquidity very fast, and that's kind of the more recent thing that we've been working on.
Awesome, thank you. And with that, I'll pass it back over to you, Yuri.
Okay, thanks, guys. I guess about me really briefly. So I'm CEO and co-founder at Concordia, which is a modular risk and collateral management protocol. It's focused on unifying and enabling multi-chain collateralization of digital assets. So it focuses on letting people collateralize any eligible asset across multiple chains and get credit for the value of those assets in sort of a unified cross-margin account. But I guess more than that, that's sort of a productization of the core innovation, which is really focused on bringing kind of best practices from risk and collateral management in the traditional world into a permissionless architecture, and doing it in a way where it's composable, so that other people can sort of outsource that hard problem to this thing permissionlessly, and kind of build on it composably. I guess in addition to that, we also have a fund separately to that called Tabia, which does direct investments and fund-to-fund investments. Previously, I spent some time at Binance, where I was vice president for business development and founding executive director of the BNB Chain Foundation. And before that, I spent some time in the AI space. I co-founded the AI division of a Chinese company called JD.com. So if anybody wants to sort of jump the shark and talk about generative AI versus crypto, which I hope we can avoid, I have thoughts. And before that, I spent some time like Mac in the hedge fund world with D.E. Shaw. So look, I think we have a really good multiplicity of perspectives, and I really want this to be interactive, not just in terms of the speakers, but also in terms of listeners as well. That's the beauty of Twitter Spaces, as Alejo alluded. It's really, really bottom up in a delightful way. And so I just want to, I guess, say a couple things to frame out the conversation. I would say that, with all due respect, I think that we're being somewhat deliberately reductionist, right, with this title, which is, can DeFi beat CeFi on high TPS chains? If you want to really dig into that, you can do it from multiple angles. What is CeFi? How is it different from TradFi versus DeFi? Is it TPS or finality that's more relevant? But I kind of want to take this, in the direction that our speakers and that the community feels is the most interesting. And so I would say my first question for all of us, and I think anybody who wants to speak up should among the speakers, and we can open it up from there, would be, what's the best way to put some rails around this conversation from the beginning? Like, what would it mean for DeFi to quote beat unquote CeFi? Like, how do we even lay out some metrics to evaluate this?
Yeah, really happy to take this one if that's okay with you guys.
Go for it.
Yeah, so first of all, love the question. And as this is the crux of the topic, I think it makes sense to go into some detail here. So to define the terms DeFi and CeFi, and then also to set the goal of DeFi. And this is, I guess, required to figure out what it would mean for DeFi to beat CeFi. So CeFi and DeFi, of course, refer to centralized and decentralized financial systems. And I'm going to include TradFi here because, in my opinion, the space between TradFi and DeFi, with all these new regulations that are coming down, will continue to shrink over time. And also the term financial system, like I think it gets thrown around a lot, but I'm going to define it as a set of institutions, markets, regulations, and procedures that facilitate the creation of money, as well as the transfer, lending, borrowing, and risk management of financial risks. And to have some examples, like the US financial system, I would classify as a CeFi system, and Ethereum, I would classify as a DeFi system. And like a CeFi system is any financial system that is hosted on one or more unique nodes. So if, for example, the servers that Bank of America operates go down, then the US financial system loses functionality. However, for a DeFi system, it's hosted on multiple logically identical nodes. So on Ethereum, if any one validator goes down, Ethereum will not lose any functionality. Another way to think about it is that a DeFi system is like a containerized financial system. And now to like quickly touch on what I think like the goal of DeFi can be, it could be to improve the lives of people by improving the platforms that they run their financial lives on. And for DeFi to beat CeFi at this goal, it would need to contribute more to the improvement in people's financial lives than CeFi. And like how exactly to measure that, like I'm not going to go too much into that, like happy to leave that to one of the other speakers. But it can do that really in two ways. So one would be for users to migrate parts of their financial lives from CeFi to DeFi, or for DeFi to be enough of a competition for CeFi to improve on its own accord. So for example, like Tesla produced EVs, but the legacy car manufacturers then also invested a lot more in EVs because of that competition. And so like part of that impact in my mind can be attributed back to Tesla. And for DeFi to win at this, it really, I think, needs to play to its strengths. So the benefits that DeFi has over CeFi are similar to the benefits of microservices over monoliths. And I'm like taking this kind of angle on purpose because I've worked on quite a few microservice migrations over the years. That and this goes back to the containerized financial system analogy. The first strength really is resilience. That a global financial system, it's a tightly connected web of mostly national CeFi systems, and the interfaces between these systems are not explicitly defined. So like a change in one of these subsystems can ripple across the global system with really unpredictable consequences. And there are many examples, like the Asian financial crisis, which started because the Thai baht depegged from the US dollar, or the global financial crisis, which started because some homeowners in the US got liquidated on their mortgages, or the flash crash of 2010 that happened because of a bug that was never actually really root caused. And the like this complexity has big implications. So it's almost impossible to upgrade part of these systems. So like some of these systems still run on 50-year-old COBOL code because the benefits of any one migration don't justify the risk, because like downtime or loss of trust would be catastrophic here. Like a failed migration could totally like conceivably take down the whole global financial system. So it's effectively like a monolith that's become too risky to deploy. And like an attack on the financial system also is often listed as one of the highest ROI terrorist attacks that would be possible. And this is something that the government is like, very concerned with. And if the system were to run on DeFi, it wouldn't be nearly as easy. And the second strength is observability. You hear all these horror stories about, the Fed setting interest rates based on price data that they get from people walking through grocery stores with clipboards, or phoning up small businesses asking about how many people are on their payroll. DeFi migrating could really solve this. And the last one is auditability. That DeFi is under a lot of pressure for not being compliant with securities regulations. But in my opinion, it really has the opportunity to blow CeFi out of the water on this area, because the cornerstones really of US securities regulation are disclosures, registrations, and anti-fraud provisions. And all of these at their core are about reducing the information asymmetries between insiders and outsiders, which then lead to principal agent issues. And like as we saw last year, like this can really like have bad consequences. And this would be a lot more difficult to pull off if custody were not nearly as widespread, or these services were offered through MPC wallets on chain. And to bring this back to TPS, and just to finish this off, the transactions they're a limited resource in the blockchain, right? So higher TPS means means higher supply and lower price as well. And in my opinion, it is really like this lower clearing price for transactions that will grow the use cases and allow DeFi to improve the financial lives of people with the resilience, observability, and auditability that it brings.
That's really interesting. I think that would be good, because that was incredibly insightful, and it was a lot of information at once. What I like about that is that in the end, you called out a number of areas where DeFi has advantages over more centralized approaches for financial use cases. Obviously, there are a lot of places where it has disadvantages, particularly since it's still new. Would any of the other speakers like to maybe riff a little bit on that sort of concrete area of what are the advantages and the disadvantages of DeFi versus CeFi now, and how might that change in the future, given that we're still in the sort of skeuomorphic, very early stages of applying this technology to finance? Anybody want to jump in?
Sure. I guess like maybe I can maybe like I guess like first thing first. Definitely love the insights that Nico gave out, and I guess maybe to just give out like a current situation of DeFi. Like in my opinion, I guess to your question about will DeFi beat CeFi. So I think, in my mind, I think DeFi has already sort of won the game in some aspects. As like people need to keep in mind that there was a time where Uniswap's daily volume was actually higher than Coinbase at one point after the FTX crash. Yes, a lot of money did go to exchanges, but like I think $2 to $3 billion did go to DeFi as well. Where I can say like, look, there are a lot of people that believe in DeFi and actually decided to push money on chain instead of their bank accounts, and that to me is like a really good win based on the current situation we are in right now, and totally think that code can be the law right now over there. Obviously, and I guess based on the conference right now we are in, and I think Move might just take us there more securely. But I guess with regards to what needs to be improved is pretty much when you compare with the CeFi side, that is the exchanges, I think we are very, very far away from even being called an industry from a traditional metric perspective. I guess we need to just focus more on the stable coin supply right now, like, and see how how DeFi compares it to CeFi, and actually see if people are actually making use of the word DeFi, right? That is, are they participating in the governance? Which I think right now the best example would be someone like DYDX, where you have a really involved community and they actually care about what they're doing, and I guess like protocols like Concordia as well. I think coming in like they could potentially be a great stepping stone for a lot of the TradFi hedgies, since they kind of help solve a lot of issues with the user experience and kind of help defend against the severe liquidity fragmentation problems that we have right now, and not to mention again, but obviously being interoperable across multiple chains. And obviously with regards to the point of the network being down, that is definitely an issue. However, I still believe in the monolithic. I mean, I think a chain can be monolithic, but its architecture inside that can be modular. Yeah. um, and with regards to regulations, I definitely think that is something we really need to look at, because there's going to be like two versions, like based on my conversations with a lot of regulators here. um, it seems like there's like two versions of DeFi and regulated DeFi, which is obviously super ironic. But unfortunately, for a lot of these big financial institutions, like even ourselves, we cannot really do a lot of things in DeFi, because unregulated to us is almost as good as being illegal. So
Yeah, I guess since you mentioned Concordia and a couple of things there, I'll weigh in a little bit. Um, for me personally, right, I think my bias is I spent some time in traditional finance at a large hedge fund and, you know, doing investments in AI. And so when I think about where we're at, I think that one of the beauties of DeFi is that it gives us the chance to build in parallel to the traditional financial system, which gives you a freedom to actually go out and create technologies and get a certain amount of utilization that's never really existed before. And any like historian of finance or technology will tell you it's super, super hard to overcome financial incumbents. It's really, really hard, which is why you see so many old legacy technologies locked in for so long. Um, and you saw a lot of this happen in the wake of the 2008 financial crisis. People came up with better ways to create clearinghouses for derivatives that would have had lower reserve ratio requirements, because they would use more sophisticated algorithmic technologies to facilitate that. And typically the problem that you get in the end is one of adoption, right? And so I think what's beautiful about what we have is the ability to go out and kind of move fast. But I think it's also important to almost have two sort of sides of your brain, or I don't know what the metaphor would be, but to look at it from two different angles, because we also have to realize that for all of this stuff that we're building to really become meaningfully useful, it's got to create real value for real people, real users, and ideally speaking, as much as possible across as many types of assets as possible. And that means at the end of the day, somehow you've got to reconcile yourself to dealing with the so-called real world. And that I think is sort of what we're getting at here, in a very specific use case, which is, I think, a highly financialized use case. And a lot of the things that Nikhil mentioned, I think really do stand out as obvious advantages for DeFi, right? It's the openness and transparency, it's the extensibility, etc. Right now, these are sort of toys in comparison to the user experience you get from centralized options. That's pretty much always the case when there's a new innovation that comes out. But I think that if you look at what's happening in the space, particularly in the wake of FTX, at the end of a whole series of kind of failures of CeFi, you see the potential, I think, for this openness and transparency to be combined with automatic and algorithmic, properties and approaches to actually create a superior risk management approach even to what traditional finance has. And I think that's actually what we're missing right now. Risk management in CeFi and in DeFi is actually inferior to traditional capital markets. And one thing that regulators are grappling with, and when I was at Binance, we had a lot of conversations with regulators in various jurisdictions about this, is like, to what extent do I have to use traditional regulatory approaches where I just hold someone responsible for doing the right thing in a top-down way, versus how can I hold code responsible if it's a smart contract? But I think in the future, you're going to end up seeing more of a spectrum than a binary in terms of how regulation comes in the sense that I think you'll see things like CBDCs, which will be fully regulated, potentially even nationalized in certain places, highly regulated stablecoins that are fully collateralized and backed, like the USDCs of the world, how that will probably end up. And then a series of progressively more, let's say, risque approaches along a spectrum. And I think the potential here is for us to potentially to try and use the opportunity and the freedom that being unregulated offers, but to start being realistic about how we can apply it. For us, what we really focus on is how do we bring best practices from sort of the way that assets are cleared, the way that markets sort of are viewed dynamically by risk models rather than sort of statically, as a lot of the kind of more primitive approaches in crypto use. And how can you do that to kind of let someone get credit for their asset value, regardless of what chain they're on, like in a single account? This is just a piece of the puzzle, though, and I think that we're going to be very reliant upon other people solving hard problems like decentralized identity and a lot of the data, middle layer type stuff and Oracle stuff, to make this, I think, really work, to be able to extend proper credit on chain, to be able to kind of make DeFi a critical part of the financial infrastructure for the next generation. But what I think is really cool is that in our conversations, I'm starting to hear even really high level leaders in traditional banks and other traditional financial institutions start to hold the view that these technologies will play a critical role. And that's, I think, a big change even from a couple of years ago. But just to kind of move this along, I guess we've talked a little bit about some of the pros and cons. Maybe let's take this over to Move for a second, since this is MoveCon. What do we believe are the advantages that Move offers, right, as a language? And I don't want to limit it to sort of high throughput, right? But what about Move more generally? What are the things that Move facilitates in terms of making things easier for developers to do in certain ways, in terms of throughput, and whatever other attributes have drawn us as a community to build financial products here? What would we highlight as the differentiators?
I guess like maybe I can just do like a quick overview of why like as Saison we're kind of bullish on anything that's being built with Move as well. So I guess like one is like basically understanding like what are smart contracts and what they should be doing, which is basically they should just be able to define new asset types, read, write, and transfer assets, check control policies. And the current languages that are used for smart contracts are like super limited and may not like allow features such as passing assets as arguments, storing assets in data structures, or declaring asset types that are kind of used across contracts. And then I guess the second point would be like the language that should be used for smart contracts should be able to allow safe abstractions for custom assets, ownership, and access control, and at the same time also have a strong isolation to write a safe open source code that kind of interacts with untrusted code written by motivated attackers as well. And I guess like compatibility with chains also like solve key issues such as like no dynamic dispatch, no mixing of aliasing and mutability, and obviously the type memory is resource safety that has been enforced by the bytecode verifiers like pretty important as well. And just to highlight the point about isolation, like I think strong isolation by default is like very necessary for robust security. And I guess, and then a TLDR, I guess, would be like the languages used for smart contracts in DeFi should just allow for flexibility in defining and handling assets while prioritizing safety and security, which and isolation against potential attacks. And I think Move is I guess the only language that has so far solved this without adding any more complexity.
Anybody else want to add on to that?
Yeah, totally. In my mind, it all ties back to the goal of accelerating innovation in the space of financial systems. So, like if you can configure these financial systems more quickly, more accurately, and with more confidence, you're able to accelerate innovation. And I mean, being at MoveCon, I'm sure you guys like all know the selling points of Move, it being easier to reason about, like the ownership of resources, upgradability, with like enforced backwards compatibility, et cetera. So I'm not going to bore you with going down a whole laundry list, but it is really that acceleration that I think adds value, and also I think resilience. I think the more technologies you have in the stack of this decentralized global financial system, the more resilient it is. I mean, you see that with Ethereum really like pushing the multi-client strategy. I think Move is part of that at a higher level, at the level of blockchains.
So let me push on that from a technical perspective, and then also kind of rephrase the question from more of an adoption perspective. But I know that several, maybe all of the people here who are speaking, and probably many of the listeners, have built on Move and also previously on other chains and other languages. Are there any other kind of things that you would highlight as like what are the real differentiators? And I think it's also important to talk about the pros and cons. Are there any sort of significant cons that we see with Move compared to Solidity or Rust or whatever other languages that we built on or are continuing to build on, I guess, in the case of some of us?
I mean, tooling for one, it's too new to have sort of the tooling that Solidity and Rust have. I think that's definitely a big issue for new developers coming into the space.
And how would you guys characterize at this point, as we learn more and we see more people building, kind of the real differences, if any, in accessibility to developers to Move versus Rust, shall we say, which I think is a topic that I've heard much debated. Is it significantly easier to pick up Move, or are we finding that those differences, to be honest, they break down as you see like a larger N of data points?
I think those are probably pretty fragile differences. I think it's kind of the job of any developer to be able to quickly learn new languages and systems and contribute to that. So
let me flip it around again, because I think there's another angle to this that I don't hear people talk about that much, and I'm curious personally what people think. So obviously, if we're building this stuff, we want people to use it, and if we want people to use it, we have to, as Sharvin mentioned, we have to engage with a variety of different types of actors, right? Not just other crypto native builders, but increasingly regulators or companies that are subject to regulation, or just companies that are dealing with assets of intrinsic value, et cetera. I think one of the things that has been difficult for a long time, and one thing that I, observed when I was at BNB Chain, is that most existing L1s prior to the Move ecosystem, were built by, what would you call them, charismatic technical founders, right? The Vitaliks of the world, right? Or the Anatolis of the world. What I think is interesting about Move is that all of the founders have a really strong background in big tech, and the IP came from big tech. And there's this sort of big tech aura, big blue chip Western tech to be specific, and kind of identity, maybe DNA for the teams, because there are a lot of people migrated from Meta. Do we think that there are potential advantages from more of a kind of branding perspective, in terms of making traditional players who are looking to adopt this technology for the first time comfortable with like who's building the infrastructure, the approaches that they might take, right? Because of this veneer of, traditional Web 2 technology DNA. Like, is that something that you guys have thought about or have run into, or not relevant so far?
I could also chime in again here. I know that adoption, especially when you go up the institutional chain, gets slower and slower. And so, like, I know last cycle, for example, last cycle referring to kind of the wild bull run we saw, um, a lot of institutional people were just comfortable using Solidity at that part. At that point, they were like completely understaffed when it came to anything outside of Solidity, and so there was a variety of opportunities on for example Solana, but they weren't even equipped to tackle them because the people they had in house and the systems they had set up and like all this stuff takes time was in Solidity. I very much expect that cycle to continue as well. Like I think um, there's a lot of advantages with being able to again quickly move to new languages, and again that's like part of your job as a developer. But on the same time, especially when we're talking about institutional movers, and when we're talking about institutional movers that interact on chain, these tend to be more faster moving, smaller firms. More like the prop shop type of architecture than definitely not your like mutual fund type of architecture. And so they're going to build out infra native to the ecosystems that they've watched have TAM for what that they've watched have real usage for a significant amount of time, and that they have conviction will continue to have usage. And so that's where they're going to be equipped. And so that's like a struggle point, I think, as well, when like new technologies are constantly being introduced, is that especially on like the trading side, it takes a while to build up the infrastructure in place to actually be able to trade on like a single decentralized exchange on any chain. And that takes a specific person that's skilled in a specific typically skilled in a specific language, and you have all these security concerns as well with the infra that you're setting up. And so you could have really smart people that are familiar with a variety of different languages, but things have to go through like the internal processes that play out even at these smaller moving, like faster moving shops that we see. Like when we talk about institutions, those are really the only institutions actually interacting on chain still. So that's like potentially an interesting wedge, I think, to look at things through. Is you'll get a lot of promises too. You'll get a lot of like, yeah, we're setting up infra, we're moving on this, like, we're really comfortable with this ecosystem. But at the end of the day, like, people are going to go after where the biggest opportunities are, A, and B, where they've seen, opportunities play out over a historical time period, where it gives them enough conviction to justify the time spent building up infrastructure to be able to trade on that in that place essentially. So I think that's just one consideration, just particular when you're talking about institutions. Retail, for the most part, is just people interacting through UIs that a lot of time definitely don't understand the nuances of the underlying architecture they're using, and so they can kind of like move at will. And that's why a lot of new ecosystems need to like really focus on the retail segment. But that's something that has kind of guided our focus at Margin, I know, is understanding what part of the infrastructure cycle more institutional players in quotation marks are in when trading on chain.
That makes a ton of sense. Anybody want to jump in here as well?
Yeah, totally. So one difference that I think is crucial between say, I mean, I'm going to talk about like Aptos specifically because this isn't like a Move feature technically, but having like a coin module. So like coin or tokens are really like the cornerstone of DeFi, and the like while ERC20 was a huge, innovation and unlock for the space more broadly. The fact that it's an interface rather than an implementation, in my mind, is like a huge drawback, because in like the salmonella contract, is kind of a totally valid ERC20 contract because it fulfills the interface, but 1 in 1,000 times the transfer function could just error out. Like there's really like no guarantee there, and I think users come at this come to crypto and they hear the phrase token, which really is like a metaphor to describe like a very idiosyncratic software in a way that makes it more approachable, which is really powerful, but also can have like a downside when the metaphor like isn't applied correctly. And like different chains have completely different implementations, abstractions of this concept of a token or a coin, and we use the same word for like every single chain basically. This I think this causes a lot of confusion and allows people to like make a lot of assumptions that really aren't accurate about these features being equivalent to each other. And so like a language or like a chain having a canonical implementation is a really big step forward. But in my mind, we kind of need like a global definition of this, because going back to the disclosures part, so how is blockchain going to interface with regulation? Regulation is really big on disclosures to reduce these information asymmetries, but like disclosures don't really mean anything if you're not on the same page regarding the terminology. Like imagine, you're in a grocery store and you have 2 items and you're trying to compare them by their nutritional label. Like the FDA can come in and define the format that every CPG has to put on their product. But if the CPGs use different definitions of fat, carbs, and protein, like it doesn't really mean anything. And like right now I see kind of a big issue with this use of the term token to actually describe like things that are under the hood completely different. And like I don't really see an integration between DeFi and CeFi in any meaningful scale without nailing down the terminology that we use a lot more. Because like a insurance company that is like using some ERC20 token contract, like in theory they'd have to actually go down and like look at the source code and do the due diligence of like, is this implemented correctly? And just like I just do not see that happening at scale. Yeah, and so I think that's an important transition.
That's a really great point, right? Like we talk a lot about fragmentation in whatever crypto, Web3, whatever we want to call it these days. And if you look at the history of technology, right, it typically is pretty difficult to get people, when there's a number of competing standards, to kind of adopt the same standard. I think fragmentation of terminology, as you mentioned, is actually not talked about enough as one of the key sort of points of fragmentation. But I think it's worth thinking about like how meaningfully would we expect a solution to present itself or to play out, right? Because I think it's sort of about as likely to expect people to self-organize into organization as it is for the United Nations to agree on highly contentious issues, if you know what I mean. And so I think this is why you see a huge push towards interoperability solutions. And if you look at just for the way that the average person interacts with technology in their daily lives, there's such a huge contrast, right, between Web 2 and Web 3. And I think that we have to move eventually towards a world where infrastructure doesn't have brands, right? Apps have brands. Things that do things for individual users have brands. You shouldn't really think about what layer one your thing that helps you in your daily life runs on any more than you think about what OS your web server runs on, in that sense. But because this is new, just like every new generation of data technologies, right? When they're new, you build in silos, you build in monoliths, and eventually, after you solve the hard problem well enough, you start trying to figure out, how do I embed this into the real world, and also how do I create interoperability so there isn't so much fragmentation. That's what we think a lot about, I guess, because like to us, it seems much more realistic to be able to, I guess, use the right kind of risk management and sort of omnibus approach where you synchronize across collateral eligibility, risk management, a dynamic model that looks at volatility and liquidations, and sort of create a ledger that lets people teleport value around rather than sort of wrap it and bridge it, right? Which is, I think, something which is inherently increasing fragmentation aside from all of the attack vectors that it brings. And that's like one type of fragmentation that you're attacking, right? Is fragmentation of value or liquidity. I think that on top of that, though, the next step is, how do you defragment the user experience, right? How many point solutions would we expect people to reasonably interact with on a daily basis? I would argue that in Web3, people have to touch way more individual single-use things than they do, in any other part of their lives. And so I guess one sort of follow-up question here would be, actually I'd love to hear, Mac, what you guys are thinking about this, because I think we're sort of attacking similar problems in certain areas anyway. But how do you see things playing out, or how does the whole group, I guess, and actually I would also encourage anybody who hasn't spoken much to make sure to jump in, and if you want to change the direction of the conversation, please feel free to do so. But I'd love to sort of maybe take a poll. Like, how do people actually see this fragmentation in different areas, whether it's fragmentation of terminology, or fragmentation of how liquidity can move around and value can move around, or fragmentation of the user experience? How do we see that getting fixed over time? What do we see as realistic, practical avenues towards making a dent there, right, given where we are?
I'm happy to take this one, but also if someone else wants to answer first, feel free. Cool. Yeah. Okay. So fragmentation. My personal opinion is that if you think about like the evolution of blockchains, the first blockchain was Bitcoin, and it had this like extreme counter positioning to the centralized financial system that existed in the late 2000s, and then Ethereum tried to like maintain as much of that decentralization as possible while adding a like a very feature-rich language on top of it in order to code up smart contracts that could do anything. And so like they're a general purpose like monolithic chain. However, like this does have it adds its own constraints, right? As in the only like top level object that Ethereum supports is a contract. But as in software engineering, your data modeling and definition of interfaces is about 75% of the challenges. Like the implementation afterwards is oftentimes trivial. And by having like general purpose chains, I think that does, while giving us a lot of power, I think also limits us to some degree, as in every DeFi protocol has to re-implement some like core financial components that are like oftentimes really like really tricky to get right. And so like personally, I do think that application specific chains that are able to create data models that solve like a very specific problem are a way to fix that effectively. So like the functionality that is looking to get solved can be solved like once and for all, or like at least like optimized in one specific location. And like you see that with like DYDX launching on its own chain, and I think there will be a lot of that as well, like going forward. As it happens, like the token functionality and asset transfer functionality, like I do firmly believe that there should be like a chain that focuses on that. I mean, if you think about how payments works in Web 2, you have like Apple Pay, for example, has like a very simple API that like any application can integrate and says, I want to transfer assets. Like a user creates a payment request, and that request goes out, and then the API responds, okay, payment request has been transferred. Like it's not like every single app on the App Store has to like re-implement like the transfer of assets from like one person's account to like another person's account. And so like I think it is building out this infrastructure to launch application-specific chains and like interchain messaging that allows us to solve each use case once and for all and reduce fragmentation.
So maybe why don't we open it up a little bit now, and especially for those who haven't spoken as much, like what are some areas that you guys would like to kind of dive into in this conversation that kind of fit within the broader aegis of what we're digging into here?
I guess just to add on to Nico's point is I guess like so like my family office side, like we were kind of LPs into like pretty much like most of the top 20 hedgies over there. I guess like hedge funds would be the most appropriate, I guess, start for the traditional capital to come in, and later on, someone like us could potentially come in as well. For I guess like the key issues that we just want to see, they want to see getting solved is pretty much as you kind of alluded to earlier, is like not having multiple touch points, not having to go through the pain of bridging assets over. And the most important thing is, like I think the TradFi world was like really, I mean, the whole the Flash crisis, the Flash Boys crisis was like extremely horrible, mainly because of a bug consensus, right? And also based on like conversations with quite a few regulators, they were actually pretty open to Libra back then as well, and kind of resume conversations. And they're still pretty good with Move because of the type system that Move has that kind of prevents the most common programming errors, such as like null dereferencing or buffer overflows. And the other main important thing is obviously liquidity. You do not want to be anyone's exit liquidity. And I guess like for that, like we just need a lot of incentives coming in from, I guess, initially from the foundations on how to actually walk the institutions through the chain and how they can actually use this for their day-to-day operations as well.
Yeah, I think the other thing too is we do need to have more projects and more builders explain how what they're building makes sense and is robust from the perspective of a traditional institution, so that foundations actually can point to these things and say, hey, we're not just building, toys, right, that are not totally unusable to you for obvious reasons. There are people who are sort of at least at the infrastructural level, or at least at the level of, the quality of how risk management is done, who are sort of thinking about things as if they were going to take this to the investment committee at a traditional exchange, right, or a traditional bank, and the assumptions that they make, the way that they think about the inputs to their models, and the way that they put things together would actually stand up to scrutiny. I think it's difficult to kind of to people think it's impossible in many ways to kind of take that approach and also be crypto native and move fast and break things. But I think that in a lot of ways is a false binary, and it's easy to get caught up in sort of the ideology, which I also am a fan of permissionlessness and everything that I think entails. But I think that there's a kind of a practical approach where you can start taking best practices from TradFi and making them more permissionless. And one thing that has struck me over the years is how little, for a long time, um, things like AMMs would, put on, let's say, a handbrake, or would code a handbrake when it comes to like massive market shifts into their smart contracts, right? And when I talked with people about this early on, I remember people saying that whole approach doesn't make sense. You have to have someone with their finger on the button. That feels like CeFi or TradFi to me. But you can come up with an approach that you code into a smart contract where that happens automatically. And I think that the sort of what I'm trying to get at is that there are a lot of things which can be made permissionless, but are also going to draw on the 30 or 40 odd years of modern financial history and learning. And I think that we have to do a better job of incorporating those into what we do. That's what we think about a lot, I guess. We have about 15 minutes left. I want to make sure that before we just kind of go down the wonderful list that Pontem and we kind of brainstormed before this in terms of topics and follow-up questions, are there any other like areas that are just different to what we've touched on so far that any of the speakers would like to add or to bring up?
I guess like with regards to the topic, right? Like with regards to would high TPS kind of help centralized institutions embrace DeFi? I think I think like like whenever anyone wants to market things, I think TPS should not be the only thing that anyone should look at, because the for me, like technically the best metrics would be pretty much like the true TPS and not just random TPS out there, because obviously we have seen instances even today where chains just fake out their TPS when in reality it's just some validate accounts. And I guess for me the most important thing is the time to finality and the Nakamoto coefficient. Um, But again, that really depends on each chain's, like, I guess, how old they have been and how slowly they sort of quote unquote decentralize. But I guess censorship resistance should be the most important thing. And then I guess, like, the most common use case, I guess, I mean, the most common thing anyone should look at is, like, regardless if they're crypto or not, is just general growth metrics, right? Like, for example, you have all these really fancy things like protocol. I mean, the TradFi metrics, like equity is tokens, and then price to sales is, well, they have like different on crypto. You have different metrics, and then basic stuff like ROA, number of active customers, the churn rate, etc. I think those are, like, definitely still the basic metrics we should look at, that any institution has to look at, because, as Mac alluded to earlier, like, people want to go only where there's opportunities. And obviously, like, a lot of these TradFi guys, we don't really have a lot of the crypto native talents, right? And it's really tough to sort of go through the entire, like, alternate dictionary coming out, and it's really hard to educate our IC members or even our board of directors or something. So I guess, like, we should just, like, kind of focus on first making it more human readable rather than more dev readable. I think that's also, like, an issue Ethereum as a community has, right? Like, for any dev, Ethereum's like a pretty great place because they go really deep into the technical stuff, but all that stuff doesn't really matter, and they just make things complex unnecessarily.
Anybody want to riff on that? I will add, I guess, that I think that finality is often conflated with TPS when people talk about this. It reminds me of the old megapixel wars, right? Early in the history of digital cameras, where after a certain point, the marginal value of adding more megapixels was far less relevant than the size of the sensor and how sensitive it was. But ultimately, there can be low TPS but fast finality, right? And that's the natural relationship. In fact, usually high TPS causes slower finality. And so I think it's important to really dig into what of these metrics are actually relevant to use cases right now, and which of these metrics are relevant to specific use cases. There are a lot of relatively fast finality networks right now, and most of them are not maxed out by most use cases that we have. So I think it's good to try to get past the mumbo jumbo, and really focus on, like, what do you want to do, and what do you need to do it. And I think for me, actually, what you said, Sharvin, that resonates a lot is I think that the people who are building up better middle layers and better tooling, to mention what Mac gave a head nod to, are really important. Not just because they're making it more human readable, but also because, I still think that the real magic of DeFi is extensibility or composability, right? It really seems to me that that's what's going to allow us to financialize a far greater array of human activities. When I was at Binance, I got approached by almost every major label who were interested in basically creating marketplaces for decentralized, fractionalized song rights trading. And at first, I kind of didn't get it. It just seemed like another person trying to put something on a blockchain. And then I realized that to be able to do this across jurisdictions, at scale, for such a huge number of people, the composability and automatability, right, of smart contracts is really a killer app, as well as the ability to kind of cut across, traditional securities regimes and the passporting issues that you have with that. And as I dug deeper into it, a light bulb went off in my head, and I was like, Jesus, like, I feel like the next DE Shaw might be founded inside, Universal Music's, music exchange, which, would be crazy. And the same thing is true for GameFi, theoretically, in that sense. And so I think that making composability work better, right, which cuts across making things more human readable, but also just sort of setting more standards, reducing fragmentation when it comes to terminology, and doing a better job of not rebuilding everything from scratch every time you want to do something. That is one of the, I think, the long-standing, trends that you see in crypto, because it's very developer-led. But you start to see, I think right now, a maturation of, like, a variety of different products and technical, functionalities that allow you to say, hey, I don't have to build that. I'm just going to actually tap into that existing version of that, which is mature, and I can rely on it for my business. So I can focus on my hard problem, not trying to solve 100 hard problems that don't have to be solved for me to do something big. I think that's really, really important as an approach and as a mindset, I would say, that will actually allow us to start making a better user experience. Full stop.
And sorry, just to add on, right? Like, I think people all kind of ask this question a lot on Twitter. I see like, what kind of DeFi features are not there? What can we add, etc. Right? Like, I think that is pretty cool. But I think that should not really be the biggest priority right now, but rather improve the current use cases that are out there. Like, for example, I think to be called the industry, and there's no insurance really out there for crypto, to be honest, like on chain, and that's like really a bit odd, to be honest. Like, so like something as basic as insurance, right? I think there needs to be a lot of work needed to be done, which obviously TPS does matter, where your basic real-time insurance products are triggered automatically by certain events or conditions, right? And then with regards to more other use cases, again for DeFi specifically, and more specifically for regulated TradFis, is identity verification or KYC. We have seen like a lot of these DeFi specific KYC companies that some governments in developing countries use. However, like it's definitely not up to the standards where our regulators would kind of say like, this is okay, you can use this. So mainly because of the real time over there again as well. Like, and then the third issue, I guess, is scalability, because I think that's an issue DeFi or crypto in general will always face. If they grow more, there's going to be more chances of performance degradation. So like, I think I guess like when we actually look at any chain or something, we kind of do like a situational analysis on what the scenario would be like if just like 60% of all the people in crypto, which is not really too much, by the way, kind of start using this one chain, and we kind of measure like what kind of performance issues are we going to see in this chain. And yeah, so basically the TLDR is like, I think it's a question of how can the current basic features be improved that are always important no matter what other features come in. And like if we had to choose something, like obviously what we are missing is real-time settlements. Like, I mean, there are a lot of protocols that claim it's real time, but it's not really real time at all. And when two or more dApps are involved, and I think that is very much needed for someone like us or even a hedge fund.
That's great. So we've got 5 minutes left, and just to be mindful of time, I want to make sure that we just do like a quick lightning round. And why don't we get sort of one key takeaway or one key thought or statement from each of the speakers that they'd like to leave us with, just based on this conversation. Why don't we start with Sharvin, then we can go down the room.
Sure. I guess like one thing that we would like to see every DeFi protocol do is, again, like I guess the last point I mentioned, just take this time, the bear market, to solidify your basic features and the middleware infrastructure that's out there that kind of enables I guess like operating over multiple chains. Because if you really want institutions to come in, that's very much needed. If you don't have that, it's an easy lose. Like easily, like someone will lose in that game. And then the second thing, I guess, from my side is, it's just to understand like I mean, every time I talk to crypto founders, it's like majority of the crypto founders, they talk about TBL and the volume. That's it. But when you look at a business, it's pretty much same, like Web2, Web3, whatever. It's all about users coming in, and how do you not prevent a J curve? Like, for example, not going to name the chain, but it's a layer 2, right? Like everyone's just using it, but why are they really using it? Are they doing anything meaningful there? I don't think so. They're just there for airdrops. And whenever I see a J curve, it's just like an instant red flag, because there's no real value there. And yeah, I mean, for us, we are very focused on actually potentially looking at doing what we do off the chain, that is lending. potentially on chain for mainly real world assets. And for that, like we want to be sure of the language and the language being used, how secure it is, and just understand, like, is it something that needs to follow the entire chain consensus, or is there something we can play around and kind of own our own objects?
That's great. Thank you for that. Would anybody else like to jump in?
Yeah. Um, I think another key factor that affects fragmentation in this crypto space is interoperability, which is the like cross-chain interoperability, like the ability of blockchains to communicate with each other, allowing seamless transactions, seamless transfer of value and information between them. Like if they can create chain bridges, atomic swaps, side chains that can help reduce fragmentation, it will really go a long way in user experience in this space. And education and awareness. Some cryptocurrencies as a whole and blockchain technology are still relatively new to are still a relatively new concept to many people. You get, and there is a need for greater education and awareness in order to increase adoption and understanding. Initiatives such as community outreach programs, educational resources, and social media campaigns can help to raise awareness and build a more informed and engaged user base in the cryptocurrency space as a whole.
Yeah,
Yeah,
I totally agree and strongly
yeah,
echo that. In fact, that's kind of what we're focused on, is how can you transfer value without bridging or fragmentation. So that's very top of mind. I guess I would add, that's obviously a huge thing to solve, and it's a big, hard problem. I think what we would aspire to do is to build on top of that as more progress gets made by us and by others, and also use that to defragment the user experience so that you can start seeing people be able to select the best thing of whatever they want to do from across, all of Web3, and you start seeing projects being able to compete based on UX in the broader sense of the term, based on user value, rather than competing based on a whole array of other factors because of fragmentation, right? And because of these little walled gardens that we get caught in. Anybody else want to jump in? Mac or
Yeah,
Nick?
totally. The idea I think that that I'd like to leave the group with is let's not throw the baby out with the bathwater. So a lot of the problems and constraints in DeFi and CeFi are the same fundamentally. Like this technology, blockchain and DeFi does shift our constraints. Like there are new tools in the toolkit available, but fundamentally principles of good system design and incentives as well still hold. And I think, for example, like Move being developed by Meta is like one great step like in that direction. Like a lot of those learnings and principles have been applied there. But one example is, for example, auth, right? Like a lot of people have thought about how to auth in Web 2, and like a lot of work has gone into that. And I think there's a lot that we could carry over. So what if a chain, for example, would natively be able to accept Web2 identity attestations from like your Google account or your Coinbase and Facebook? I think that could really like break down the custodial, non-custodial dichotomy. So yeah, let's not throw the baby out with the bathwater.
Yeah, one thing I would quickly say is that it's really fun to think about like all these capital efficiency improvements and like think about composability and unifying like the UX across different chains. But I at the end of the day, like across crypto entirely, we have like less than 1 million daily active users. And like that's a huge issue, and so when I think of like just like shifts in technology surrounding money, like you could just go back to like when the internet came out. All of a sudden you could buy things on the internet, and that was like a different model, and a lot of the world followed that trend. Like once payments on the internet were really sticky, and like people weren't going back to their old ways of doing things. That brought on a lot of like people already using the internet that now have purchasing power, can use it accordingly. But as well as like that, then like our financial system was built around this new system, and like a lot of the things we use on the payment side started adopting like IoT and just a lot of like the internet stuff we use. I think the same, like I would love to see that trend play out for crypto because it hasn't yet. Like before it, like we can optimize what's currently on chain as much as possible, but we at the end of the day we need like a flow of new capital, and we also need like real world integration. And so while we're in this weird state of like what's clear and what's not on the regulatory side, what constitutes a security and what doesn't, like kind of looking back at the traditional architecture and trying to overlay that over what we have with crypto now, we could just like break new grounds and start to like once again like incorporate payments like all around the world really, and start bringing new users on chain, new capital on chain, people again like with power to buy things, like transact on chain. And I think that's kind of like the first step in this like real world integration. If we don't figure that out, I think that's kind of a lot of what we're doing is just going to kind of stay in its little bubble, and that's probably going to be like minus EV at the end of the day. So that's one thing I would probably push on.
So I think we're a few minutes over time, which is I think totally fine. But I just want to make sure that we wrap this up in a relatively timely way. So does anybody else want to jump in who didn't have a chance to kind of leave a parting remark? Just want to make sure that everybody gets their chance. I think that maybe we're good. Look, I really want to thank everybody for tuning in and listening. Hopefully this was a thought-provoking discussion and just makes me very excited about, personally our project kind of coming out of stealth and having more time to get involved in the community and really learn from each other. I definitely want to follow up with the folks who were speaking today, and I'd also love to get involved in more of these Alejo and hopefully hear more from, maybe next time we can be a little bit more interactive with listeners as well. I haven't actually done that many Twitter spaces before, so very, very excited about the whole dynamic here. Thanks for having me.
Awesome. Thank you, everyone. Yeah, just audio works. Cool. Yeah, thank you, everyone. Thank you, Yuri. Thank you, all the speakers. This was an awesome session to kick this off. Yeah, just really want to express my gratitude to everyone. This was an amazing session kicking off this conference. One of many, and yeah, the fact that this can be done on Twitter Space is relatively easy. Would love to do these even more, ad hoc. No need to do this only once a year. So yeah, thank you, everyone. Also, thank you, Aptos, for coming in, being co-host, so that we can, beat the algos here. And we're getting close to 200 concurrent. I'm sure several hundred have dropped in and dropped out all day session. So yeah, thank you all, and we'll be getting started for the next one. Yes, we are going to have Vitaly, head of community here for Pontem, the Bra Bears, Brother Joe, Smith from Aptos Monkeys, Fisher from Aptomingos, Dizzy from Clutchy. So yeah, thank you all for joining in for the DeFi session, and now kicking off the NFT session. So yeah, I'll kick it off and hand it off to Vitaly, our next moderator. And thank you, everyone, for joining in the previous session. And yeah, look forward to more of these.